What's going on, guys? Fairly decent investor here once again. Stock we're looking at today is going to be DataDog, ticker symbol DDOG. Still at my house, don't have monitors. Bear with me. Hopefully this stuff's going to get better once I'm back at school. But kind of like my other videos, just going to start with an introduction overview of what the company is. I'm going to move into some of their charts, so some technical analysis. From there, financial analysis, look at kind of their numbers, what's going on with them there. Do some other analysis afterwards, earnings, kind of other analyst predictions, things of that nature. And then I'm going to kind of just close it off with my conclusions, takeaways, if I like the stock, if not. So stick with me, and yeah. So I'm going to try and keep these videos to around 10 minutes. The last one I did was about 12, but I don't know, see how long this one takes from here on out. I think that might be my new goal, keep them shorter. But as promised, an overview of the stock, DataDog. They engage in development of cloud-based monitoring and analytics platform. They're used by developers, information technology operations teams, and business users. The platform integrates and automates infrastructure monitoring, application performance monitoring, and log management to provide real-time observations to optimize performance. Might sound a little confusing to kind of dumb it down because, I don't really get it either. I'm only decent at this stuff. They pretty much just make a tool to help people with computers keep track of how their programs and websites are working. It shows them what is working and what's not working, helps them try and fix it if it's not working, and it shows them how some of their applications are being used so that teams can go out and try and make it better. So they generate revenue by selling this as a subscription-based plan, and they've got different pricing models for it. They also offer professional services and training as well. They are headquartered out of New York, New York. Let's go to New York. Founded in 2010 by Olivier Pommel, something like that. He's their CEO now as well. He studied at Centrale Supélec. It's a French school. It's one of their top engineering schools. And he originally worked for Wireless Generation. He was one of the lead software architects there, and he led a team of about 100 people of the best developers in New York City and generated more than $50 million in recurring revenue. And the co-founder, Alexis Lequoc, who is now their CTO, also worked with him there at Wireless Generation. He was the director of live operations, and he also graduated from the same school, Centrale Supélec, however you say it, with a master's in computer science. So the industry that DataDog is in, packaged software, they're more cloud-based monitoring and analytics, if you want to be specific with it. So some of their competitors are things like New Relic, AppDynamics, Splunk, Dynatrace, and Sumo Logic. And just from like an outside looking in perspective, the industry is rapidly growing and expected to continue to expand as more and more businesses start to adopt this cloud-based computing. And DataDog is right now kind of considered a leader in the industry and has a strong presence in the market. They got a decent sized customer base, positive reviews. They also expanded their capabilities and reach by using strategic business acquisitions and partnerships that has helped them along the way. And kind of just the takeaway of all this is the founders and CEOs seem to have, once again, kind of a fairly impressive background. They worked together in the past. These are typically good signs. They're able to work well together when they, been in business together before and it's worked well. So those are typically positive signs. Doesn't always mean they're going to succeed, but like I say, good signs. And the way the industry is moving right now, I believe they're going to continue to be definitely on top in this cloud-based computing industry. And kind of like I mentioned before, it's going to continue to grow. More and more people are going to start adopting it. The way the economy is right now, it might not happen now, but down the line, I definitely think over the next few years, it's going to be huge. So kind of moving into the technical analysis here and looking at the charts of DataDog, you can see that it had a high of around $186 and a low of about $66, representing a roughly 64% decrease in the stock between high and low. The 1-year chart does look a little bit interesting, actually. It traded between $83 and $120 from the end of May to mid-October, and then it broke down below that support level. So since then, since about mid-October, it's really been trending between $66 and $87. Right now, it's at about $70.57, which is about 62% off from the high, so it's still a very significant discount from what it once was. It has also not been this low since May of 2021, so it's been a long time since DataDog has been this cheap. The RSI is about 40.67, which isn't that interesting, but it's getting pretty close to being pretty interesting, especially with the way that the stock has kind of been trending down. MACD is mostly even, which is kind of why it makes it a little less interesting, the RSI. But based on these charts, I would be somewhat interested in buying DataDog in the near future, given a normal economy. However, that's not the case right now. But if DataDog was in a normal economy at this price right now and dropped to around $67, which I believe is very possible over the next couple weeks, it looked like it was if it dropped to around $67, which I believe is possible to happen over the next couple weeks, and looked like it was going to bounce off the support level, I would consider starting a position around there. If it did not show signs of bouncing off the support level, meaning it kept trending down, I would still watch it and consider opening up a position as it drops lower. The issue with this is that DataDog does not have a lot of support below the $67 support level, so if it does fall, it might fall pretty hard. But comparing this to some of its other competitors, such as New Relic, DataDog stock has actually looked to be at a discount in comparison, having fallen much harder since roughly mid-August to now compared to some of its other competitors. So when looking at DataDog from a financial perspective, there's some financial analysis here. They do not make money, so we're not really looking at them as being something that's undervalued or overvalued or a value stock in general at all. We're more looking at them as a growth stock. So, with that being said, some just factors that we look at here. Their 1-year growth in sales has improved. It's increased over 70%, just over 70%. Cash and short-term investments has not been up very much, 2.7% over the last year. Total assets up about 26%. Total debt up about 26%. Free cash flow up 166%. And their price to sales ratio is about 53.5. So once again, with these price to sales, we look roughly around 3. It obviously depends on the industry that the stock is in, but just a rule of thumb is roughly 3 in general for any stock. So just some shocking things here is one of the price to sales very high. New Relic over the past year had 5.5 price to sales, and DataDog's 53.5. What I do like, however, is the free cash flow has increased 166%, which is a ton. This is definitely interesting. They have not increased their cash and short-term investments much. They have taken on more debt. So this is just interesting to see that they've improved their free cash flow by this large of a percent. But if we look just in this past quarter, one of the red flags being that price to sales has improved. Last quarter, the price to sales was 18.3, and in this kind of tech industry, 15 is kind of not, I wouldn't say a rule of thumb, but you typically see a little bit higher price to sales on some of these companies. New Relic in the past quarter as well was 4.5, but this is definitely a positive sign for DataDog, decreasing that price to sales ratio, heading back down towards 15, towards 3, whatever it may be. But just in general, nothing really jumping out here. Good sales growth and that free cash flow as kind of the biggest factors that we're seeing here. Finally, moving on now to some earnings and analyst predictions. Analysts in December have given 6 buys and 1 holding rating to DataDog with an average price target of about $107.83, representing a 52% increase from where the stock is now. Upcoming earnings are, once again, on December 31st for the 2022 year. Analysts expect a 61% increase in sales growth and earnings per share to be 0.91. Overall, this trend seems to be pretty positive in general. I do believe that this price target is a little bit high, considering it's just been trending between $66 and $87 now for a few months. And don't think the economy is going to really just see an upswing randomly here, I definitely think it's going to go the other direction. So I don't know if I'm buying those price targets in general, but that's what they're saying. But kind of just to wrap it up here with my takeaways, I do think this stock is a pretty interesting stock. The market that it's in, like the industry, is pretty good, I would say. I definitely see the need for this in the market. The founders and CEO also have a good background. They have past work experience together. Also good. And kind of on the same point about that industry before, if Datadog can kind of remain in charge of this and control percentage of the market, they're most likely going to be profitable down the line. It might take a few years because of this economy and the way it is right now. Companies may not be as willing to purchase things such as, improving their softwares. And this kind of, like I said, in this economy, this might be down the line a little bit. More companies might start moving. But I do like the company. I do like where it's going. Long-term investor, thinking 3 to 5 years here. I definitely think this could be a successful stock. More short-term investor, I don't think I would enter until it saw around $67 or lower. Right now it's about 70, so right now it's okay somewhat, but 67, better bang for your buck. Not much of a difference, but in the short term, if it can hold this like $67 range, like I was saying, and rise back up to around $85, $86, you're going to see roughly 27% on your return on investment. So that's definitely still a good percent to make there. With that being said, this is not financial advice. Simply just trying to find a niche in this YouTube market and share information about stocks that people might not always be able to get. So there you go.